Hi, Assalamualaikum. So we are from Cohort 5. Want to present our company about Sunway Berhad. So this is our team. My name is Aina Natasha binti Azmi, and our member is Nurifa Amira binti Muhammad, Nur Alia binti Hanizat, and Nur Izzah binti Abdul Manaf.
MFRS 8 operating segment is providing guidance on reporting financial information about different business segments within an organization. It aims to increase transparency and relevance in financial reporting by requiring companies to disclose information about each segment's performance. Operating segments are parts of a business that earn revenue, incur expenses, and have financial information reviewed regularly by the Chief Operating Decision Maker (CODM) for resource allocation and performance assessment. For the disclosure requirements, entities must disclose segments, profit or loss, assets, liabilities, and other key details for each reportable segment. This information gives stakeholders insight into how different areas of the business contribute to overall performance.
The Chief of Decision Making (CODM) in Malaysia company like Sunway Berhad typically refer to the individual or group responsible for making key strategic and financial decisions that guide the company's direction. In Sunway Berhad context, management monitor their operations separately according to the segment. Means that manager for each segment who analyse financial report, set business priority, and ensure the company's resources are effectively allocated. As part of reporting, especially under MFRS 8, company like Sunway Berhad must disclose financial information by segment, which is property development, property investment, construction, trading and manufacturing, quarry, investment holding, healthcare, and others. And the CODM review this segment to assess performance and make decision on further investment or adjustment. This role is central to ensuring Sunway Berhad business align with its strategic objective and meet shareholder expectation. In Bonia Corporation Berhad, the Chief of Decision Making (CODM) refer to the CEO or senior management team. The CODM evaluate financial and operational performance across the company's various segments, like fashion, leather coat, and accessory, to set direction and allocate resources accordingly. For Bonia, which operate under MFRS 8, the CODM review performance by segment to determine which area are profitable, identify growth opportunity, and make decisions that support the company's long-term goals. This role is crucial in ensuring that Bonia stay competitive and align with both market trend and shareholder expectation.
In Sunway Berhad, there are two types of segmental report, which are geographical segment report and business segment report. Geographical segment report provide information based on different geographical region where a company operates. This reporting type breakdowns financial information like revenue, asset, and expenses by region or country, helping stakeholders to understand how each location contribute to the company performance and assess regional risk and opportunity. Sunway Berhad geographical segment in 2023 are divided as follows. In Malaysia, the primary revenue contributor generating 5.16 billion with strong profit contribution across various business segments. In Singapore, contribute RM 328.9 million supporting the group regional revenue. While in India, added 364.4 million highlighting Sunway active presence and growth in this market. In other countries, including China, Australia, and UK, provide additional revenue stream through smaller in comparison to the primary region. Business segment report focus on different line of business or type of product and services within a company. Each segment represents a distinct area of the business, such as retail, healthcare, construction, and property investment. This type of report shows the financial performance, assets, liability, and other details for each business line separately, providing insight into how each area contributes to the overall company performance. Sunway Berhad business segment for 2023 are structured as follows. This segment reflects Sunway board and diversified business model catering to multiple industries and supporting the group growth. This segmental report have been providing a detailed and transparent view of the company operation, focusing on distinct area of the business or region for better decision making and resource allocation. The type of segmental report in Sunway Berhad are property development, property investment, construction, healthcare, trading and manufacturing, quarry, investment holding, and others. Under MFRS 8, operating segment company categorize their business unit into reportable and non-reportable segment to improve transparency in financial reporting. For reportable segment, there are significant segments that meet at least one of the following thresholds. For revenue, 10% or more of the total revenue, and for profit or loss, 10% or more of the combined profit or loss. For the asset, 10% or more of the total asset. If reportable segments together don't cover 75% of the company external revenue, additional segment must be included until they reach in this threshold. Company must provide detailed disclosure including revenue, profit, asset, and other relevant data for reportable segment. For non-reportable segment, the segments that do not meet the threshold are considered non-reportable. They are grouped together as other segments and reported with summarized financial information. Management can choose to disclose more about non-reportable segment if useful. MFRS 8 used a management approach aligning segment reporting with how management view and assess the business. This structure helps users to understand significant part of the company operation while keeping minor segment concise. This table presents a summary of the revenue, profit, loss, and the reportable of each business segment in line with the 10% threshold criteria. Sunway Berhad used profit basic to apply 10% threshold test, which is the total profit of each segment divided by the total profit of all segments. This concludes that property development, property investment, construction, and healthcare are reportable segments. For calculation based on 75% test rule, total external revenue of reportable segment divided total external revenue of all segment and multiple 100%. After the calculation, we get the 65% which is less than 75%. The cumulative external revenue of the reportable segment which is 4.002 and 389 is approximately 65% which is below the requirement 75% threshold. As a result, the existing reported segment, construction, property development and property investment and healthcare do not meet the 75% test requirement. Additional segment or revenue will need to be considered to reach or exceed the 75% threshold in compliance with the reporting standard.
Then about two key benefits of segmental reporting from Sunway Berhad. So the first benefit is greater transparency in revenue and profit drivers. Segmental reporting allows stakeholders to see which areas of a company contribute most to its revenue and profitability. Sunway Berhad operates in various sectors including property development, property investment, construction, healthcare, trading and manufacturing, quarry, investment holding, hospitality and others. By analysing the revenue and profit from each of these segments, investors and analysts can understand which business line and are performing well and identify segments that might need more strategic focus. For instance, if Sunway Healthcare segment shows strong revenue growth, it signals to investors the potential for future expansion in this area, informing investment strategies based on sector performance. The second benefit is improved risk assessment and diversification analysis. Segmental reporting enables users to evaluate the risk exposure of a company by highlighting financial results across different business areas or geographic location. In Sunway Berhad case, stakeholders can assess how various segments, like property development or construction, respond to economic cycle or regulatory changes. For instance, if the property development segment is underperforming due to market saturation, investors might perceive this as a potential risk offset by Sunway diverse in portfolio in healthcare or hospitality. This information is available for assessing overall business resilience and for making risk-adjusted decision. Here is the snippet of segmental report and I will explain about the revenue of the segment. The group achieved a record high revenue since Sunway merged and listed in 2011. Specifically, the group's revenue climbed by 70% to 6.1 billion ringgit in financial year 2023, reaching the 6 billion ringgit threshold for the first time, driven by increased revenue from all core business segments. Similarly, profit before tax rose by 9% from 909.2 million ringgit in the previous year, financial year, to 993.3 million in financial year 2023. So the first segment is property development. In financial year 2023, the property development division reported revenue of 1,414.9 million ringgit and profit before tax of 211.6 million ringgit, compared to revenue of 1,165.3 million ringgit and profit before tax of 155.3 million ringgit in financial year 2022, marking an increase in revenue of 21.4% and profit before tax of 36.3%. Revenue in the current period rise on higher sales and progress billings from new and ongoing local development project and the completion and handover of a local project. Next is property investment. The property investment division registered revenue of 898.6 million ringgit and profit before tax of 293.7 million ringgit for the financial year ended 31st December 2023, compared to revenue of 690 million ringgit and profit before tax of 235.8 million ringgit in the previous financial year, representing an increase in revenue of 30.2% and profit before tax of 24.5%. The improved financial performance in the current period was attributed to strong performance of the leisure and hospitality businesses with increased visitorships to the theme parks and higher occupancy rates at the group hotel, coupled with higher revenue from operations of property investment assets. The third segment is construction. The construction division generated revenue of 1,688.9 million ringgit and profit before tax of 197.9 million ringgit for the financial year ended 31st December 2023, compared to revenue of 1,281.6 million and profit before tax of 186.6 million in the previous financial year, marking an increase in revenue of 31.8% and profit before tax of 6.1%. Higher progress billings from local construction project contributed to the better performance in the current period. After that is healthcare. The healthcare division reported a share of net profit of 152.7 million ringgit in the current financial year, which is 13.6% lower compared to 176.8 million in the previous financial year. The higher share of net profit in financial year 2022 included a 48.3 million share of a one-off net remeasurement gain of leases as per MFRS 16 in relation to the early termination of rental agreement of Tower A and B occupied by Sunway Medical Centre (SMC) and Sunway City. Excluding the one-off net gain, EBITDA of the division grew by 33% in the financial year 2023, and the share of net profit of 152.7 million in the current financial year was higher compared to the adjusted share of net profit of 140.9 8.1 million in the previous year. Besides that is trading and manufacturing. The trading and manufacturing division registered higher revenue of 954.6 million ringgit and profit before tax of 45.1 million ringgit for the current financial year ended 31st December 2023, higher by 5.8% and 8.6% respectively compared to revenue of 902.1 million ringgit and profit before tax of 41.6 million in the previous financial year. The improved financial performance in the financial year 2023 was mainly due to higher contribution from the domestic market. Furthermore, Quarry. The Quarry division reported a 9.9% higher revenue of 446.3 million and a 101% higher profit before tax of 27.5 million ringgit for the financial year ended 31st December 2023 compared to revenue of 406.2 million and profit before tax of 13.7 million in the previous financial year. The improved performance in the current year was attributed to increased demand from local council and highway projects, which resulted in higher sales volume and average selling prices for both aggregates and premiums.
MFRS 134 provide guidance on the content and presentation of interim financial report and applicable to entities that are required or choose to publish interim financial statement. Objective: MFRS 134 aim to ensure that entities interim financial report contain useful information about its financial performance, financial position, and cash flow for part of financial year. The goal is to provide timely and reliable information for user, for example, investor and creditor, to make informed economic decision. Interim period definition. An interim period is any period shorter than a full financial year, such as quarter or half-yearly period. MFRS 134 does not specify the length of interim period, but instead offer the guidance on their preparation if management chooses or is required to provide them recognition and measurements. The same accounting policy must be applied in the interim period as in the annual financial statement. MFRS 134 prescribes that revenue, expenses, and other financial transactions should be recognized on year-to-date basis. This principle helps ensure consistency in reporting period. Any unusual or non-recurring item should be disclosed, as well as adjustment to prior period figure when applicable.
Question 2. One of the significant events are acquisition of a share capital. For the period ended 30 June 2024, Sunway Berhad had issued and paid up ordinary share capital by first, issuance of 112,738,590 ordinary shares valued 151,197,097 in Malaysia pursuant to exercise of warrants. Second, issuance of 72,380,900 ordinary shares valued 181,676,059 pursuant to the dividend reinvestment scheme DRS. By issuance of these shares, it affects the statement of changes in equity since the issuance of shares will increase the number of shares capital.
Secondly, gain on fair value. Sunway recorded a fair value gain of 62,271,000 ringgit Malaysia from the redemption of an investment. A share of fair value gain of 27 million ringgit Malaysia from newly acquired investment properties held by an associates. The increased Sunway's profit before tax, enhancing overall profitability and equity positions.
Next, we go to the type of interim report for the Sunway Berhad. The financial year for Sunway Berhad is ended on 31 December each year. The company prepared the interim financial statement quarterly. We analyzed the interim financial report of the second quarter ended 30 June 2024, which is from 1 April to 30 June 2024. This is the interim report for the current and comparative of each statement for the second quarter. For the statement of financial position, the current interim report will be at 30 June 2024, while the comparative will be at 30 December 2023. Next, the statement of profit or loss and other comprehensive income. The current interim period for the 3 months starting from 1 April 2024 until 30 June 2024, and for the 6 months is starting from 1 January 2024 until 30 June 2024. While for the comparative period, SOPL for the 3 months is starting from 1 April to 30 June 2023, and the SOPL for the 6 months is starting from 1 January to 30 June 2023. Furthermore, for the statement of cash flow for the current interim report for the 6-month period is starting from 1 January to 31 June 2024. Meanwhile, the 6-month period for the comparative it is starting from 1 January to 30 June 2023. Lastly, the statement of change in equity at current interim for the 6 months it is starting at 1 January 2024 to 30 June 2024, and the comparative it is starting from 1 January 2023 to 30 June 2023.
That's all from us. Thank you. Bye.